It's time now for today's strategy session. Our question today, how do you trade a trade war? Joining us now with more, we've got our own Josh Schafer, resident trade war expert now. Josh, what
give us the inside scoop.
What's the trade?
So the trade is, maybe don't trade. We give that sort of advice here often, right? That trading is rather hard. And if you're a long-term investor, maybe steer away from some of these short-term headlines. But I think the last 48 hours has really been a good example of this, guys. So I was looking at something like the QQQ, the Invesco QQQ, that's an ETF that tracks the NASDAQ 100, a popular ticker on Yahoo Finance's website. That was down about 1.7% at the start of yesterday, only down 0.7% by the end of the day as all of these movements continue to happen with tariffs, right? One moment you feel like, oh wow, tariffs are actually coming, Trump's gonna go through on 25% tariffs. That was what the market felt like on Sunday night. Fast forward to 10:30, okay, tariffs aren't coming to Mexico. Fast forward to 4:30, tariffs also aren't coming to Canada, at least for the next month. So it's just been really jerky. And I think that's probably been the biggest takeaway for me is we still don't really know anything. And we keep on trying to act like the market is comfortable in one way or another. And I think all we really know right now is the clear read has been more tariffs than expected, or at least the tariffs that Trump has said is viewed as bad for the market. The market is not pricing that in. The market thinks that Trump is using this as a negotiating tool. So less tariffs has been good. What actually happens feels like a total wild card right now, and it feels like there's no real forecast there or real ways to sort of base where you're going. So the real takeaway perhaps being the political uncertainty that we talked about to start 2025, the fog over markets that people have sort of been teasing, it's definitely here and it's not going away, and this is going to be kind of the theme over the next month.
And I think also the question is, it begs the question of what this means for that rotation trade or what it means for the broadening out, right? Because I think a lot of strategists that we've talked to argue that you need a little bit more certainty, you need a clearer path, especially when it comes to policy, especially when it comes to tariffs, just what that means and how much that maybe handicaps that trade in the short term.
For sure. I mean, look at what we're really only using pre-market action, right? Because the tariff news faded so quickly into the day. But look at the Russell 2000 futures yesterday, right? Russell 2000 futures were down 4% at one point, right? That's a key part of perhaps the broadening out trade. It's a trade on maybe rate cuts. It's also a trade on economic strength, right? And both of those things sort of fade if we get full tariffs. So does probably, to your point, Shauna, when we talk about broadening out and all these other sectors participating, what do strategists usually say when we talk about broadening out? Well, the U.S. economy is strong, right? And the U.S. economy is going to continue to grow. Well, if we get 25% tariffs on Canada and Mexico, most economists would tell you that probably hurts GDP. So it probably does hurt sort of your broadening narrative, at least to some extent, and it certainly puts more uncertainty on all of those businesses and sort of their outlooks, right? And I think that's something we're hearing from companies.
Yeah, and then you briefly touched on it too, but also factoring in the Fed.
Yeah.
And what this means ultimately for their playbook. We heard Austin Goolsbee yesterday. He was talking about the fact that it could potentially further delay cuts. Obviously, I don't think that came as a surprise to most people. But I think when you try to figure out the timeline of that delay and how big of a factor that is potentially going to be, and whether or not you could even talk about so much about the reflation story that then you're talking about hikes again too. So all this uncertainty obviously very much can be a lot of people on the sidelines, which is why I think we're getting so much to some of the times our frustration, not clear answers from some of the strategists just in terms of what the next 6 to 12 months could potentially look like.
I think the final thing I'll point out, or perhaps final thing I'll point out, is the strength that we have seen in the market over the last couple of days has been interesting though, right? And Jared was just sort of talking about this, like, a key gauge you look for on, say, the VIX is usually over 20, right? When we get over 20 on the VIX for volatility, that's kind of when people are like, okay, clearly the market's worried. We haven't closed over 20 either of the last 2 days. Then you take a look at the S&P 500. The S&P 500 actually hasn't fallen 1% either Friday or Monday, and so by the close, right? We're closing relatively strong here, and it seems like there is a bias for still this strength in the market and investors wanting to be in this market, and I guess to some extent perhaps just not believing that we're going to get the full Trump tariff policy here.
Which is kind of incredible when you take into account the headlines that we've gotten since January 1st, when you roll in
keep
deep
saying
seek,
it.
It's remarkable that we're still looking at gains for some of these major averages. All right, Josh, thanks.